In case you've been living under a rock, gold prices have been on fire, jumping 20% in just the past 2 months. That takes gold to a near doubling in price since pre-pandemic, when it was meandering along at just $1,500. Yesterday, it closed at $2,400. So if you don't own any gold, it might make sense to get some in case it catches on. Plus, Peter Schiff can now buy nice shirts. Now, soaring price is a new experience for many gold investors who are long accustomed to taking the slow and steady stairs while stocks take the elevator. Granted, they take it up, they take it down. But here we are with stocks flat over the past 2 months, and gold is up 20%. In fact, at this point, gold has now matched the S&P 500 throughout the pandemic. And of course, it runs circles around the US dollar, which is melting like ice cream in the sun thanks to federal spending and a very obliging Fed that has knocked a fifth off the dollar's buying power since the pandemic. So what's driving the gold rally? 3 things: inflation, central bank buying, and geopolitical tensions, including Russian sanctions, with a guest appearance by some large mystery buyer rumored to be backed by the Chinese government. Taking each in turn, we're coming up on 6 months now of rising inflation as the transitory inflation narrative turns out to have been a head fake. I also mentioned recently how central banks are now openly admitting that they're preparing for some major financial catastrophe. A senior Dutch central banker said the quiet part out loud a couple months ago, and presumably the crisis they have in mind is sovereign debt and the bank collapses that tend to come along for the ride. And then, of course, the geopolitical tensions. Above all, Russia and China. Now, Russia itself is not very important. It really is Mexico with nukes, with a fairly inconsequential economy. The problem is the U.S. sanctions, particularly the effort to seize the assets of the Russian central bank, those have put countries around the world on notice that their dollars are not safe, that they can be seized anytime you look at Joe Biden funny. That sends those banks to the next best asset, including gold. Now, gold is a pretty small market. All the gold in the world is worth about $16 trillion, while all the government debt is worth closer to $100 trillion. So that means if money is moving out of government debt, it can move the needle a lot on gold. So what's next? Brought to you by Unchained.com. At this point, Wall Street is falling over each other, trying to up their gold targets. So Goldman is saying 2,700, Bank of America says 3,000 by next year, UBS is saying 4,000 in the next, quote, 2 to 3 years. That happens, we'd be looking at a near tripling of gold prices, which would be the biggest rally since the 2008 crisis. Before that, you'd have to go back to the 70s. Given inflation and sovereign debt are both getting worse and actually speeding up, and given that wars and geopolitical tensions appear to be cranking out assembly line style, these numbers may actually end up being conservative for gold prices. Fundamentally, gold is insurance, and when the world is as badly run as it is today, it's the last line of defense, and investors are finally realizing that. Read the rest of the article with charts, graphs, and all the gory details at profsainange.com. Okay, we'll be watching. See you next time.